thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. If you're new to my channel or new to my videos, well, we create these videos on a daily basis and try to give you the information on what's impacting mortgage rates on any given day. Uh, Sometimes it could be something from the economic calendar, it could be headline news, it could be something geopolitical, and sometimes even the markets, they kind of get a change of sentiment, meaning that sometimes what would be good news for bonds is now bad news. And if you're on the sidelines, you may not understand what's going on and why these things are happening. We try to get that information out to you so you have a better understanding of what's going on with markets and what to look for. So if you're in the real estate business and want to know what's going on, and when you talk to clients, well, hopefully this will give you some insight, as well as for those who are looking to refinance or purchase, they might be trying to figure out what's going on with rates and if they should maybe try to lock in a rate or not. So hopefully this will give you the information to help you make an informed decision going forward in the process. A little bit about myself is I'm a loan officer. I do work with a national lender, so we can certainly help you out with your refinance and your purchase needs. If you got, but even yet, we can also want to act as a resource for you folks. So if you guys got questions for mortgage rates or programs or whatnot, we're here to answer those questions for you as well. So without further ado, we're just going to jump right into this report here. We'll start off with the economic calendar. Then I got really one or two items, if you, depending on how you want to say it, but it's from the market services PMI, and they're giving us our manufacturing and services industry here. So we'll start off with the market manufacturing PMI. Anything above 50 on these indexes means expansion. Anything below 50 is considered contraction. So as you can see, back in December, we were at 57.7. Forecast was supposed to be a slight dip to 56.7, and it dipped a little bit further than that to 55. Now, the services sector went from 57.6 in December. Forecast was coming for 55 and dropped all the way down to 50.9. So it's on the verge of contraction rate there. January. So we'll have to kind of keep our eyes on this to see if this is something that's going to be trending downwards or if we're going to see some improvement in this. So hopefully we'll see some improvement on that going forward. Later today, we do have a 2-year note, but 2 years really haven't been much impact on the mortgage rates. So we'll have a treasury auction based on the 2-year note. Usually when we get the 5, 7, or 10 years, there's kind of more impact, or 30-year bonds, of course, are what's more impactful on mortgage rates here. Now, headline news, again, we're kind of approaching the Fed meeting this week. The Fed will begin, FOMC will begin tomorrow, and then give the rate announcement on Wednesday. This will be the big report for this week. We'll be keeping our eyes and ears on. We do got later in the week also the PCE, which is the Fed's favorite gauge for inflation. So that will be brought out later this week as well. So this is really what investors are kind of bracing for, is a Fed meeting, because if you recall, about 3 or 4 weeks ago, we got the minutes, and the minutes basically implied that they will be perhaps aggressively reducing their balance sheet. Now, what that means exactly, that's going to be one of the things we're really trying to find out here once the Fed gives their announcement on Wednesday. We're hoping they will address that, because that had the markets in turmoil for the last couple of weeks here. And the question about that is if they are going to just let their portfolio mature and to fall off the books, or are they looking to actually sell their portfolio? So if they're going to be more aggressive and start selling, well, that creates a little bit more problems for the mortgage-backed securities and bond market, because that just creates a lot more supply out there, and just there's not enough demand for that right now. And stocks have been down for the past couple of days, especially today is tanking a bit as it's getting prepared for the Fed meeting. So we could see a correction involved with that, but again, they're trying to brace for a much hawkish stance in terms of where the Fed is going, coming ahead to fight inflation coming up here right now. Now, as you can see here, we'll start with the mortgage-backed securities. We're up about 30 basis points right now. This just took off in the last few minutes. We could see some price improvements if this is sustainable. We were just up 16, 17 basis points, and just over the last few minutes, it just started shooting up 30 basis points. So that's going to be enough that could lead lenders to a reprice for the better for us, which is obviously good news out there. So as you can see here, It was steadily going upwards, and then just recently you can see this big spike here, these two spikes here, and that's what we're kind of seeing right now. Over the last few minutes, a big jump there. So, so needless to say, mortgage rates are better priced today compared to what we saw the other day. Now, something to be cautious of, as I'll go over here, looking at the yields right now, yields are down to 1.71. It's reaching this level here. As you can see, this was kind of a strong level. It finally broke above this technical, and then it didn't stay up there for very long, for about maybe a week or so, or a few days. But we did test this at least like 3 times here before it did do that bounce. Now we're down here for the first time now, and we'll have to see if it can break below it or if it's going to go ahead and hold before it springs back upwards, building momentum, spring back higher again, and then raise rates. That could add more pressure to mortgage-backed securities. This is why I'm saying just be a little cautious, because looking at mortgage-backed securities or looking at treasuries, this floor here could be pretty strong before it will allow it to drop further and maybe even touch off the 25-day moving average moving forward. So, but enjoy. We got the better rates today, which is obviously good news. So lastly, we'll talk about the conforming loan limits, conforming rate, average rates that's out there. These do have points built into it. So we'll look at the 30-year is at 3.67 right now, and we got the 15-year at 2.94. Those again, if you follow my videos, there's no one size fits all. These are just kind of the averages that are out there. Again, a lot of variables are going to pricing the rate. So if you guys got questions or need a rate quote, please reach out. We're here to help you guys out with that as well. That's pretty much a wrap for the day. If you guys like my videos, I greatly appreciate if you could help us out and smash that like button and even share us. We greatly appreciate it. Any support you can lend. We do appreciate you guys. Thank you so much for watching. We'll look forward to see you guys in tomorrow's video. Have a great rest of your day. Bye-bye.